What's going on, traders? Julian here doing a video recap on MVIS. This is something that I traded both ways. Now, there's one thing that I'm always talking to my community members about, and that is having what I refer to as a hedged thesis. Obviously, you need a trading thesis. Why am I getting long or why am I getting short? But that is sort of generally geared towards one side of the equation. When I say hedged thesis, what I mean is I'm looking at the trade from both perspectives. I want to do this, and so I'm planning to trade this way. But if that fails, then I'll take advantage of the other side, and this is the other side of the equation. And this is how I'm going to, this is the thesis that I've got for both a long side and a short side, is what I'm trying to say. So MVIS yesterday is something that that broke long, and I was trading this to the long side yesterday. And the bottom line about this particular trade yesterday is that this really came to fruition into the close. And if you saw yesterday's video, you'll see that perfect entry was right through here and created that floor, little double bottom, and got a buy signal on the MAC, and then it pushed trendline resistance and popped well past high of day, and then flagged and moved higher into the close. Now, I was out of this at the close, and I was free and clear on this. Now, I was in at 580 on the call side, and I was out at about $8, and that was into the close. And those were front months. It was actually weeklies, pardon me. And I was trading the the option side of things. Now, MVIS popped up on my screener today, but it didn't come up on my scanner as a winner. It came up on my scanner as a total loser. I've got this saying that today's movers are tomorrow's losers, and this is a primary example of how yesterday's mover was today's loser, and this is how you have a hedged thesis when you're looking at stocks. Now, the first thing you want to do is you want to look at all the key levels on these particular charts that you're looking at. In this example, MVIS, and you can see that we pushed resistance, pulled back, and moved higher into the close. Now, the big thing here is that you'll see that moving into today's pre-market, there was a move to the downside, and look what it did. It actually bumped right off of yesterday's retest slash short-term support level here at 24.89. So this is very interesting. Price then rallied, and then out of the gate, you can see that it lost a lot of steam coming out of the gate. Now, this was where I should have got in. I got in a little bit lower, and it was at the break of this level right down through here at 23.79. And the bottom line is that if this thing bounced off of this level at 24.89 and then started to make its way back up to 31.06, I would have started to look at this on the long side of things. Having said that, that's one side of the equation. That's thesis number one for a long trade. And then having a hedge thesis means that if this double bottom support level doesn't hold and it fails, which it did, then I'm going to have a short opportunity. And what I'm going to do is I'm going to look to grab some puts and take this thing to the downside. Now, you can see that this thing actually crushed that level at 24.89. I got in a little bit late, like I said. This thing did rally up into its 9-day exponential moving average, and then I said, you know what, hey, look at this. You've got some support, pseudo support down through here, another test of that support level, and now you've got a dead cat bounce. If this thing found resistance into that 9-day, but if this thing comes through 21.23 and takes out that level, I'm then going to look for a potential gap fill down in the 18 level, and we'll sort of just see what happens through there. Now, you can see that this thing stepped down. It didn't quite fill that gap, but what you can see is it did double bottom again in and around where or the bottom of this gap right through here, or the bottom of the candle on the upside of the gap right through there. But you'll also notice that it created a double bottom today, right? Creating support at a prior resistance level. This is why it's so important to understand your levels when you're trading. And again, the idea of this video is to give you some insight into the concept of a hedged thesis. If you're looking at a stock that is volatile and it's about to break out long, you're going to create a thesis saying that if it takes out these levels and it produces this pattern and all of my indicators, if I'm using them, line up and do X, then I'm going to jump in doing Y, and this is how I'm going to trade my edge, and this is the trading thesis. But if it fails, then I've got a different way of trading the stock, and a hedge thesis just means that if it goes against your long idea, then you've already pre-built in a short idea, and if the short idea comes to fruition, then you execute on that side of the trade. And that's what a hedge thesis is, and that's why it's important to know these levels. That's why it's important to say that there's a long side to everything, there's a short side to everything, and just because something is moving up yesterday doesn't mean that it's necessarily going to continue today. And the more extended things get to the long side and the great trading that comes through that overextension and volatility, you have to understand that the closer you then get to an overextended rollover to the downside, and that's where the other side of the hedge thesis comes into play. Hope some of this has helped. If you have any questions, feel free to reach out. Julian at jluztrading.com.